I'm Deepak Singh from State of the Market. Welcome to Technically Bullish. Today I'm going to focus on a stock called SREI Infrastructure Finance. Now I have taken the chart from the December 2006 to September 2007 just to give a little bit of price history. Prior to December 2006, the stock touched a high of 75 prior to May-June 2006 crash, and then stock went in for deep correction. Now if we look at the stock from December 2006, you see the stock was just moving along, and then one fine day in February, the stock made a very smart move from the levels of 55 all the way to 65, 70 levels on a very goodish volumes. But then, bad luck for the stock. This was the same time when the pre-budget market correction started and the stock succumbed to the market selling pressure. And then that correction became worse with the global factors of Shanghai market crash and probably disappointment from budgets, and the stock went all the way down to 45. Then again, stock started recovering with the market and then reclaimed the level of 65, 66 levels. And then I should not use the word sold off. It again, encountered a resistance and drifted down. And then, on 31st of May, the stock made a phenomenal move on goodish volumes. Now, if you look at this chart, if you look at this pattern, if you have been following my state of the market notes, this is one of my favorite chart pattern, which is called cup and handle. You see here, there is a formation of a cup and handle with a breakout happening on a news trigger. And the moment this breakout happened, the stock made a strong move of 65% in just a matter of 3 days to levels of 105. And since then, the stock has turned sideways. Now, when stock moves, they move a lot. I mean, they don't move by 20% and that's the end of the story. That generally happens when the market goes in for deep correction and pulls down the stock along with it. But if stock moves and start trading sideways, it is still considered bullish. It means that the stock is consolidating for the next move, right? Now let me complete the structure with another thing, which is 75. Now you remember the level of 75? I said prior to May-June 2006 crash, the stock touched the level of 75 and then went in for a deep correction, and probably a year later, made a breakout with a gap up. So now 75 should act as a strong support. So we can make a statement that SREI Infrastructure Finance is a technically bullish stock as long as it stays above 75. Okay. Now the question comes, what is next? And what should an investor do and what should a trader do? Now if you are an investor, then you should use this band to accumulate the stock, and you can make an assumption that the next breakout will happen maybe a week from now, a month from now, maybe 2 or 3 months down the line. But whenever that breakout will happen, the next move will be pretty solid of again 50-60%, which may come in just a matter of few days, right? So as an investor, you need to position yourself for that kind of a move by accumulating the stock in this band. Now remember, even if you are an investor, if the stock slips below 75 for whatever reason and closes below that, you should be out of this stock, because then the stock will go in for a deep correction and it may take years for the stock to recover. Now let's say if you're a trader, obviously this strategy doesn't make sense because there's an opportunity cost involved for being in a sideways moving stock. So as a trader, you should be definitely keeping this stock in your watch list, and you need to track the volumes. You see here the volumes have dipped. The moment there will be a buildup of volumes, you can get a fair indication that the stock is making an attempt to break out. So in that case, you can enter in the stock and hope that the breakout will happen in a week. Or the second thing what you can do is the watch for the levels of 105, because the moment the stock moves above 105 and sustains there even for, let's say, half a day, the next move is going to be very powerful, right? uh, Remember, when we look at the charts, it's all about probability and not certainty. So whenever you make a plan, you also need to make a plan or scenario that when that probability will fail. Let me give you an example. Here the stock moved above 105 on goodish volume, but the very next day it got sold off. So that means it was a false breakout, and if you are a trader, you should be out of the stock, right? So whenever you are making any investment or a trading plan, you need to also make a plan that what if my assumption fails, and what is my exit or a bailout plan. I hope you would have enjoyed this story. My objective was to help you understand that how technicals shape up on chart, so that you can create a better investment and a trading plan by looking at this charts. For disclaimer, please visit my website www.stateofthemarket.net. I would definitely welcome a feedback on this story at 2deepaksingh@gmail.com. I would love to hear from you. Thanks for listening, and you have a great day. Bye.